I'm Jim Juback, and welcome to Juback Asset Management YouTube video for Wednesday, December 4th. Here in Venice, it's sort of the quiet period as we get ready for Christmas. A lot of shops are closed, a lot of restaurants for maintenance, because tourists are sort of between, say, November 21st, which is the festival of intervention of the Virgin Mary to save the city of Venice from plague in the 1630s, on the 21st, to Christmas. It's kind of a quiet period. So the streets are relatively empty for tourists, and restaurants are giving their staff some time off, because at Christmas you then have the huge rush, and then it blends right into Carnivale, and that's a zoo. If you like this video, would like to subscribe to our YouTube channel. That way you get notification when we do our next one. That's free. You'll find a link to that down below. If you want more of my stuff, you can go to my free site. That's jubackpicks.com. That's got 3 portfolios for dividends, 12 to 18 months and 5 years. And it's all free. If you sign up, you'll get alerts every day. There's also my paid subscription site. It's jubackam.com, which has got 6 portfolios, those 3 plus a volatility portfolio, an ETF portfolio with just 5 ETFs, so you can manage your money without a whole lot of stress and stress. And then a really long-term portfolio for people with a time horizon beyond 5 years. Okay, you find links to all those down below. Okay, as well as in September of 2023, I moved lock, stock, and caboodle from New York to Venice, which is where I've been living. We did an excursion to live in Sicily for the summer. We're back in Venice. If you'd like to follow our adventures, you can go to my Substack. We moved to Italy. It's also free. Okay, anyway, today's topic is, what if the consensus about the effects of tariffs on the economy is wrong? Here's the consensus. The consensus is that tariffs are essentially inflationary. That if you tack a 30% tariff on imported goods, companies that need raw materials or import stuff to sell, like Walmart, pass that along to consumers. So the idea is that raises prices, and that's inflationary. Now, there's a really interesting piece by a Bloomberg opinion writer named Nir Kaissar, appeared a few days ago, that said basically, hey, if we look at a company like McDonald's, there are problems with this consensus view. And the problem is not that the consensus view is wrong, but the consensus view is basically conditional. It's that what this piece is arguing is that in an economy where consumers are kind of stretched, particularly where consumers are at the lower end of the income scale are stretched, companies might not be able to pass along the full effect of tariffs. So you might not get inflation. What you might get is condensing margins, and that would be a huge deal for Wall Street, because Wall Street is basically saying margins will continue to rise. Now, Nir Kaissar, it's Kaisser, or AR, uses McDonald's as an example. And back in February, McDonald's CEO, Kempczinski, said that low-income customers at McDonald's are not coming in as much to McDonald's because prices are so high. McDonald's has basically pushed through a price increase of 21% in the price of a Big Mac since 2019. And they said, this is passing through costs. And what the CEO said was, hey, well, what we're seeing is that low-income customers, and they're defining low-income as anybody of $45,000 household income or lower. So we're talking about 28% of the U.S. households. A lot of people, potentially 90 million customers. So they're having trouble with those prices, and that's why he was saying that they're going to introduce a new lower cost menu. And one of the things about that is that the president of McDonald's USA came out and said, hey, we're just passing along costs. And, well, really not true. It looks like raw material costs for McDonald's have not gone up as much as the price of a Big Mac over this period. So that what we're really seeing is that McDonald's operating margin has been going up. So that the operating margin in 2023 was 46%, and that's up from 43% in 2019. This is not the kind of margin expansion you'd expect if the company's having trouble recouping its costs. Wall Street sees operating margin going up to 49% in 2029. Now, if you think about this and you go, okay, so they're having problems with the lower part of the income scale in terms of their customers, and you're still seeing margins go up, either margins aren't going to continue to go up or they're going to continue to lose customers at the lower end of the scale. The way this affects the stock market as a whole and the economy as a whole is that Wall Street sees S&P margins, which in 2024 were about 8.7%. So let's say 9%. They see the analysts see operating margins for the S&P stocks going up to 13, almost 14% by 2027. Now, if tariffs are not simply passed through, but put pressure on companies so that they have to say, hey, either we're going to see a decline in our customer base, in foot traffic, revenue, whatever, or we have to take lower profit margins. That's a big deal for Wall Street because it means that this assumption about what's going to happen with operating margins, which is that they're going to go up by about 5%, 5 percentage points by 2027, is wrong. And if that assumption is wrong, they were looking at much slower earnings growth than anticipated, and the S&P is in trouble because the S&P is at all-time highs, and this is not what you want to see when you're trying to support stock prices at this level. I would certainly say that I think this is a danger. One of the things that concerns me about 2025 is we really don't know, what size tariffs the Trump administration will impose and on whom. We've seen 25% tariffs on Canada and Mexico, which are all subject to negotiation. Additional 10% on China, on top of the Chinese tariffs, which are already in place because the Biden administration never rescinded the Trump tariffs and then added their own. So is that the level we're talking about? Trump on the campaign trail talked about 25%, 50%, 100%. Even at one point, I saw a clip of him saying 1,000% tariffs. Who knows where we're going to wind up? This is a very transactional president. And basically what I think we'll see is that there will be some rate set on paper, and that'll then be subject to negotiation with individual companies, individual countries. And at some point, we'll know what the tariff rate is. Okay, so that's one thing we don't know. Second thing we don't know is we really don't know what's going to happen with the effect of this on the economy. Will it indeed force prices up, so we'll see a rise of inflation, in which case the Fed is going to stop cutting rates, certainly, and maybe actually have to reinstitute a rate increase or two? Or are we going to see margins decrease, as the McDonald's example suggests is possible? All those things are big uncertainties out there hanging over a stock market that's priced at all-time highs, and makes me worried. And like Warren Buffett, I think it's who's been building cash, I think it's probably time to look at a little bit of selling to build up some cash positions because we simply don't know. And 2025 looks very, very uncertain. Okay, if you like this piece, subscribe to my YouTube channel. That way you can we'll let you know when we're doing the next one. We're trying to do about 3 a week. It's free to sign up. If you like this and would like more of my stuff, you can sign up for my free site, that's shoebackpicks.com, which has 3 portfolios, dividends, 12 to 18-month stocks, and 5-year stocks. And it's free. And if you sign up, you get alerts every day when we publish a new piece, straight to your email box. Last but not least is my subscription site that has 6 portfolios, those 3 plus an ETF portfolio, a volatility portfolio. And right now, this looks like a time when that's going to come back into play. The options on the VIX are now looking very, very cheap if we're moving into uncertainty. So maybe we'll put one of those on. The last one is a long-term portfolio for people beyond 5 years. So those three things, you find links to those all down below. If you would also like to follow my adventures in Italy, I moved to Italy in September of 2023. You can go to my Substack, which is also free. That's called We Moved to Italy. You can follow our adventures there. Thanks very much. Thanks for watching.